The dollar's dead. Only no one's told it, or the ones that still love it. It's a dead instrument. It's rolling over. It's going that way. That's one of the aiding factors to why gold and silver is not going to get back anywhere near the majority of the so-called gain, as it's done in past years. That's what I don't want people to lose sight in. This parabolic decline doesn't mean it's going to get back 50% of the entire gain or something. It just needs to go through that, and then a base building period before we could start talking about real legitimate targets that some are throwing out there now of 10,000, 20,000 on gold, 200, 300 on silver.
At this point, I don't know what to tell you in terms of where the silver price is going, because I don't know who's responsible for this and how high the industrial users will bid the silver price in a desperate attempt to keep their silver stocks in use or available. It could go up to 150, could go up to 200, could go up to 300.
The US dollar is now characterized as a dead instrument in terminal decline, a reality that fundamentally alters the behavior of precious metals markets. Unlike previous cycles where deep 50% retracements followed parabolic moves, the current rally is expected to establish a high-level base, supporting future valuations of $10,000 for gold and $300 for silver. This parabolic decline of the currency itself ensures that gains are held rather than surrendered. PeterGrandich and Rafi Farber discuss the trajectory of silver, which is becoming increasingly volatile and complex to predict due to the desperation factor among industrial users. As the fiat system rolls over, manufacturers are expected to panic bid for physical inventory, potentially driving prices to $200 or $300 in a scramble to stay in business. This dynamic suggests that the next phase of the rally will be driven by existential supply anxiety rather than traditional investment speculation. Now, we present the clips from PeterGrandich and Rafi Farber's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
A Chinese company that's hoarding silver to produce its solar panels, if they have to suddenly pay down their debt and they have all this extra silver at a high price and there's a dollar crunch, they might have to sell their silver to service their debt to stay in business. This is still possible. I think it's even likely. Now, the question is, how high will silver go before this crunch happens? Will it go up to 200, 250, 300? I really have no idea. But after that top, wherever it might be, silver is going to crash, probably. I don't know to what. It could go from maybe $200 to $100, and the $100 could be the new bottom. But it could be anything. But the fact is, there's probably going to be one more crash. So I don't want people saying that, oh, Rafi was saying that silver's just going to go parabolic when the end game already. We're not, because there still has to be one more dollar crunch. But with that said, before we get into the very important slides here, you can get your gold and silver still at Miles Franklin. The premiums are negative right now, so you can get it at a discount for spot silver, which I think is what the solar panel companies or whatever industrial demands are hoarding silver right now. They can't use junk silver because it needs to be purified for whatever industrial purposes they need. And the refiners are not taking silver right now because they have a clogged backup, because a lot of people want to sell their silver and the price is really high, but the companies that are buying silver can't use the junk that the stackers have. But you can still get gold and silver at Miles Franklin. If you don't have any yet, you probably need some to get through the end game, or gold to get to the other side of the end game. Use the link in the description below. Take some of your gold and silver, put it in a dirty man safe. Use the code ENDGAME10 at checkout for 10% off. It might not be the end game right now, but it's coming, because once the Fed hits the pedal to the metal, that should be it. And that's going to come on the next and final banking crisis, which is approaching pretty soon. At this point, I don't know what to tell you in terms of where the silver price is going, because I don't know who's responsible for this and how high the industrial users will bid the silver price in a desperate attempt to keep their silver stocks in use or available. It could go up to 150, could go up to 200, could go up to 300. It could top right here and go back to 50 in a week. Silver is that volatile. And just to cover my own butt, that I didn't say that it's not going to be volatile. It's going to be volatile. I don't know where the numbers are going to be. But in the end, silver is money, because the dollar was born in silver. And now it appears to be dying in silver. It will have one last big flicker higher in the next banking crisis. But after that, It's not going to be the industrial users that are bidding silver higher. It will be everyone in the world, as they really do abandon the dollar as the Fed slams the gas to save the banking system, and they will save it nominally, but it will be empty of all content as the silver value of the dollar goes to zero and the dollar price of silver goes to infinity. Nothing is priced in dollars anymore, and it all becomes priced in silver ounces. It's coming. It's coming soon.
You can never know for certain all the reasons. Part of this is clearly was for a lot of years. We've talked about it. It was a manipulated investment that was used by these, I call them paper hangers. Many of them call them the Crimex, whatever. They were caught. That's what really got us going here. There's still an argument that there's still a lot of that in front of us. But it is interesting, different than this time, and you've been around it long enough, that when the market's rising, yet you're seeing physical selling, that's basically the opposite when we were telling everybody to buy things when it was a lot lower, when we used to see paper prices down on a day and people were showing up wanting to buy the metal. You and I had those conversations a few years ago, both in gold and silver. And now it's the opposite. And I just think that's another indication that this is more of a technical special situation and it will have a blow off top. But is it the ultimate top? I don't think there's any proof of that yet until you go through the parabolic decline and then you see how the market looks after that. My sense of what's going to play out is in a matter of days, weeks, or just a couple months. Multiple years down, there's only one opportunity. Listen, I said it in a recording either today or over the weekend. Forgive me because I made a few of them. The dollar's dead. Only no one's told it or the ones that still love it. It's a dead instrument. It's rolling over. It's going that way. That's one of the aiding factors to why gold and silver is not going to get back anywhere near the majority of the so-called gain as it's done in past years. That's what I don't want people to lose sight in. This parabolic decline doesn't mean it's going to get back 50% of the entire gain or something. It just needs to go through that and then a base building period before we could start talking about real legitimate targets that some are throwing out there now of 10,000, 20,000 on gold, 200, 300 on silver.
A technical special situation is unfolding in precious metals, characterized by a rare market inversion. Physical holders are selling into the rally while paper prices continue to soar. This behavior signals that a violent blow-off top is imminent, driven by industrial desperation rather than retail investment. However, unlike previous cycles where bubbles burst completely, this correction will be different because the US dollar is now a dead instrument that is structurally rolling over. Because the currency itself is dying, the inevitable price pullback will not surrender the majority of gains as it has in the past. Instead, the market will likely crash from manic highs, for example, $300, to a new, much higher floor, for example, $100, laying the groundwork for the final ascent to $10,000 gold. This parabolic decline of purchasing power ensures that even during a correction, the nominal price remains elevated, trapping investors who mistake the dip for a trend reversal. Let's get back to the interview.
Let's not forget about Doge. If you remember this time last year, every 2 hours, him and Musk were putting out these social posts about how they were going to not only end the deficits, but also reduce the debt. That didn't go anywhere. Now the deficit is quickly running to 40 trillion. The debt is running to $40 trillion. You and I can go on now, Elijah, for hours and not fully cover all the economic, social, and political concerns one should have here. And again, that's what builds my case for myself, that this is just not a time to be fully invested and having little regard to feeling that markets can just keep going up no matter what markets they are, whether they're metals, stocks, bonds, etc. The major gold producers are going to continue to print money whether gold is at 4,400 or 5,400 because their costs are so much lower. So if you're willing to ride out the 20 or 30% correction they may happen to shares, eventually a year or two from now they should be higher than wherever they corrected from. Doesn't mean that you still don't want to have some liquid to be able to, maybe if they do get too much down, 30 or 40% of correction, I'd love to run out and buy a couple of them right now if suddenly tomorrow they were off 30 or 40%. I just think this is just a time when you have to be err on the side of caution. And even if you hate the dollar or hate cash or whatever the case may be, that's still what you need to buy these assets at this point. And let's remember one other thing. That thing we were told for years that was going to replace everything, including gold, gold, which was the relic and all, that thing called, I call it Bitcoin, that's blowing up right in front of our faces. Everything that they claimed it should have done and gold was not good for, gold did and it didn't. And that's another market that's likely to come sharply off further than where it is now too. But it's not a market that I would look to buy at all, no matter how far it corrects.
There are no more contracts being sold now than otherwise. They're not very elevated at all. We have 155,000. I think it's 158,000, but this is pretty mid-tier, mid-level amount of contracts. And you'd think that short sellers would want to sell short here at $110 an ounce, but they can't, because to hedge it, it costs like $112 an ounce to hedge. So therefore, that keeps the supply of contracts low and elevates the futures contract. So this is not futures speculators that is driving the price here. Otherwise, you would see higher open interest, which is impossible right now. So what else could it be? Is it SLV? Is it retail ETF investors? No, it's not. Look at this. The blue line is the price of SLV. The black line is the amount of silver in the fund. We are not anywhere near a record high here. Record high was at silver squeeze at about 21,000 tons. We are now at, 16,000 tons. And you can see here at the 2011 high, it kind of was SLV related, because this at that time was a record high of the amount of silver in the SLV fund. Here, we're not anywhere near that. And if you zoom in, you can see here, this little box shows the interplay between the blue and the red lines. The blue is the price of SLV. The black is the amount of silver in SLV, supposedly. And you have here, at the time that SLV, the fund share price was $55, which means that silver was about 60, 62. I think there's like a $5 or $6 difference between them, something like that. You can see here we had a certain amount, whatever that amount is, of silver in the fund. And now that we are at 95, even 97 now, as of this morning, dollars per share of SLV, we have about the same amount of silver from 55 to about 95. And it's been going down since this over here, when silver was about 60. So it's not SLV hoarders, it's not retail buyers, it's not even institutional buyers of SLV. So it's not open interest in the futures, it's not SLV speculators, and also it's not the stackers either, because junk silver premiums are negative. They just plummeted to negative 3% suddenly. There was some kind of market adjustment here. We've been hovering around zero since November, and now there was a plummet to about negative 3%. So it costs more to buy a silver futures contract or silver in Shanghai in a contract than it does to buy junk silver, probably because it's not refined, and whoever's buying the silver now needs refined silver, and junk silver is not that. You can also see in Silver Eagles, the most expensive and popular of the silver. It's not even junk silver, it's more expensive. But even here you have a negative 2.55% premium on eBay. This is the main market for junk silver or silver coins. It's not the best price, but it's probably the most popular. I might be wrong about that, but a negative premium on eBay means, yeah, silver is cheaper than silver contracts. So there's something going on here. It's not the stackers, it's not the speculators. Now, getting back to the point that I made at the beginning of the video, it might make some sense to take some profits on gold, on silver bullion if you have your profits, and to put some of that in silver miners that pay a dividend. You can see here the silver to SIL. SIL is the main silver ETF, and it's a decent proxy for the value of silver miners, though it's not perfect. You can see here the higher this number is, the cheaper silver miners are relative to silver. You can see here was the silver crash of 2020, and we went up to about 1.025. We're at 0.923. This is very near an all-time high. The all-time highs are over here at about 1.025. So silver miners are very undervalued relative to the silver price. So if you don't have any silver miners and you've wanted to get a position in those, now is not the worst time to do that and take some profits from your silver, either ETFs or whatever you have. I wouldn't exactly sell your physical, but if you have any silver derivatives, silver bullion derivatives, it might be an interesting idea, though I don't recommend anything, and this is all entertainment. I'm very, very funny. To sell some of the silver bullion ETFs or derivatives that you have and get some silver miners.
With the national debt sprinting toward $40 trillion, the economic landscape has become a minefield where speculative assets like Bitcoin are imploding rather than protecting wealth. While gold producers remain profitable regardless of volatility, a prudent strategy is to maintain liquidity to withstand potential 30% market corrections. This caution is vital as political promises to curb the deficit have failed, leaving hard assets as the only reliable shield against fiscal mismanagement. A unique dislocation is occurring in silver. Prices are rising despite flat open interest and negative retail premiums. This confirms that industrial demand for refined bars is driving the move, rather than retail speculation. Consequently, silver mining stocks are now trading at near-record undervaluation relative to bullion. This disparity offers a tactical window for investors to swap overextended paper derivatives for deeply discounted producers, capturing value before the sector reprices to reality. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.